Good morning, Trinidad and Tobago, and welcome to the Bourse Report. Many investors have been inquiring as to the fortunes of the local stock market, particularly in the context of the state of the local economy. Indeed, there are several factors which could affect the performance of the local stock market, and this has already taken place to some extent with the All Trinidad and Tobago Index down 6.6% year to date. Key factors will affect and continue to affect corporate earnings, as well as other factors which will affect specifically stock price performance. So today, let's take a closer look at the Trinidad and Tobago market within this context of a more challenging economic environment. And by the numbers, it would appear that there are several challenges facing consumption spending, which is already on a downward decline. Negative economic growth, which is expected to register at negative 2.3% for fiscal 2016, would follow a period of a 0.6% decline in fiscal 2015. Unemployment trends are also on the rise, with unemployment as at March 2016 being 3.8% versus 3.5% in December 2015, or an increase in unemployment of about 1,800 jobs over a 3-month period. And this trend is expected to continue as companies and businesses scale back on their workforce in light of a more sluggish economic environment. Inflationary pressures, driven to some extent by a depreciating currency and more difficulty in accessing US dollars, will also weigh on consumer spending through higher prices. And of course, there's the issue of corporate taxation, which has been increased from 25 to 30% for all earnings of businesses and individuals in excess of $1 million, which will impact corporate earnings overall. So these factors would all have influenced consumer spending, and this has manifested to some extent in the January to August period of 2016. And here we can see in the yellow column the percentage change between January to August 2016 versus 2015 of local cement sales, which is down about 21.6%, as well as new vehicle sales, which are down around 10.4% period over period from 2016 to 2015. And this was a decline from about 11,600 units to just about 10,400 units over the period. There are some specific factors which will drive stock performance away from corporate earnings, and one of those are investor confidence, which should, all other things being held constant, be a bit lower in this particular environment. However, there are some support factors which could lend a hand in keeping stock prices up, and one of those factors could be stock liquidity, in which some of the hard-to-find stocks which investors may be contemplating selling could be reasonably quickly snapped up by institutional or other investors who may have been searching for these stocks for quite some time. A relative lack of alternative investment opportunities is another factor which may come into play, as outside of the stock market, there are really very little opportunities for the investor in the TT dollar landscape. And here we're talking about government bonds or other bonds, as well as money market funds and other investment opportunities of a similar vein. And finally, dividend preservation may also play a role in supporting the stock market to some extent, where companies with lower dividend payout ratios may be able to boost their dividends even in a lower earnings environment to ensure the confidence of investors. So where could the stock market go over the next 12 months? Well, let's take a closer look at the sector composition of the All Trinidad and Tobago Index. And here we see it will be driven by 4 major sectors, one being the banking sector, which accounts for about 41% of the sector, manufacturing one, which accounts for about 20% of the sector, the conglomerate sector accounts for about 18%, and of course non-banking finance about 14% of the sector overall. So these 4 sectors really account for more than 93% or so of the All Trinidad and Tobago Index. And we took a closer look at the individual components or constituents, meaning the individual stocks of the sector, and came up with this preliminary forecast over the next 12 months. And here we can see that the All Trinidad and Tobago Index, based on our initial projections, is forecast to decline around 4.3%, driven by the 4 primary sectors. And that would be manufacturing, which is expected to fall to the greatest extent of about 6.7%. And this would really be driven by lower consumption, higher corporate taxes, and access to US dollars. In particular, and of particular note, Angostura Holdings and Whitco are both included in the manufacturing one sector, and they would have been, specific taxes would have been placed on the products of Angostura and Whitco, which could more severely impact sales of their products. The banking sector has been doing quite well on a relative basis for the year thus far, but they could be confronted with challenges such as slowing consumer and business loan demand, as well as more uncertain loan loss experiences. Importantly, the higher corporate taxes, which will be placed on the banking sector, will affect corporate earnings to the tune of 4 to 5% incrementally. The conglomerate sector is expected to decline 4.1% on the basis of lower consumption demand and higher corporate taxes again. However, it should be noted that of the conglomerate sector, Massey and McCall, which are the local conglomerate companies, their average dividend payout ratios are quite low, around 30 to 32%, and that would mean for the savvy investor that there is some room to boost dividends even in a low earnings environment to maintain their absolute dividend payouts to investors and maintain the dividend yield on their stock. And finally, the non-banking finance sector, which we said accounted for around 14% of the overall OLTNT index, is expected to decline 1.6%. Stocks in the non-banking finance sector include Guardian Holdings Limited, Answer Merchant Bank, and National Enterprises Limited. And in the case of Answer Merchant and Guardian Holdings Limited, products which may be consumer-related in the insurance space could be impacted. And in the case of NEL, lower commodity prices for energy derivatives such as ammonia, etc., would face some challenges in the very short term, as well as production challenges in the local economy of natural gas. However, this is expected to increase to some extent over the next 12 to 18 months. So, how would an investor better position their portfolio in this current environment and with these initial projections in hand to minimize the investment risk or the impact on their portfolio? Well, for the very risk-averse investor with a very short time horizon, the probability or possibility of stock price declines in the near term may prove to be a little bit too painful or uncertain for this type of investor. Accordingly, the investors falling into this category may wish to basically sell out of their stock positions and go into relatively safer investments such as money market mutual funds, etc. For the more risk-tolerant investor with a medium-term investment horizon, on the other hand, they may want to consider stocks with certain characteristics which could limit the effect of recession on the Trinidad and Tobago economy. And here we are talking about stocks, one, with lower price earnings multiples, which means that they are more in the value category of investments. Two, stocks with higher dividend yields, which will compensate investors to some extent for the price volatility which will be impacting their portfolios. Three, stocks with lower dividend payout ratios, as we mentioned, who may have the ability to boost their or preserve their absolute dividends paid per share, even in an environment of lower corporate earnings. And of course, you may want to consider stocks with lower overall exposure to the Trinidad and Tobago economy. Finally, and these last 2 points would really include some of the cross-listed stocks as well, you may want to consider stocks which earn or pay out dividends to investors in US dollars. So that's it for this week's edition. For more details on this and other investment themes, give us a call at 628-9100. Visit our website at bourseinvestment.com or email us at invest@boursefinancial.com. Have yourself a great investing week. This has been the Bourse Report. Let's take a quick commercial break.